Disclaimer: I am not CB registered. The information provided here is for education purposes only. I will not be responsible for any of your profit loss with this channel suggestions. Consult your financial advisor before taking any decisions. Mutual funds are investment vehicles that pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other securities. They are managed by professional fund managers who make investment decisions on behalf of the investors. The goal of a mutual fund is to provide investors with a broad, well-managed, and diversified investment option. Investment model types: 1. Lump sum. 2. SIP. Lump sum investment. A lump sum investment in mutual funds refers to investing a significant amount of money in a mutual fund at once. When you have a lump sum amount, you invest it in one go rather than spreading it out over a period. Here are some considerations for making a lump sum investment in mutual funds. Market timing. Since you are investing a large sum at once, timing becomes crucial. Try to invest when the market conditions are favorable, but predicting market movements can be challenging. Diversification. Spread your investment across different types of mutual funds to reduce risk. Diversification helps in mitigating the impact of poor performance in one sector or category. Risk tolerance. Consider your risk tolerance and investment goals. Different mutual funds have varying levels of risk, so choose funds that align with your risk profile and financial objectives. Research. Conduct thorough research on the mutual funds you are considering. Look at historical performance, fund manager track record, expense ratios, and other relevant factors. Financial advisor consultation. If you are unsure about which funds to choose or need personalized advice, consider consulting with a financial advisor. SIP investment. SIP stands for Systematic Investment Plan, and it is a method of investing money in mutual funds in a systematic and disciplined manner. Instead of investing a lump sum amount, investors can contribute a fixed amount regularly, typically on a monthly basis, into a mutual fund of their choice through SIP. Here's how SIP works. Regular investment. Investors commit to investing a fixed amount of money at regular intervals, usually monthly. This amount is automatically deducted from their bank account. Rupee cost averaging. SIP helps in implementing a strategy called rupee cost averaging. Since the fixed amount is invested regularly, it buys more units when the price is low and fewer units when the price is high. This averages out the cost of investment over time. Disciplined approach. SIP instills discipline in investors by encouraging them to invest invested over the long term, regardless of market conditions. This can help avoid the temptation to time the market. Flexibility. Investors can start a SIP with a relatively small amount of money. Over time, they can increase or decrease the investment amount as per their financial goals. Power of compounding. Since SIP involves regular and disciplined investing, it allows investors to benefit from the power of compounding. The returns earned on the invested amount start generating additional returns over time. Convenience. SIPs are convenient because they can be started, stopped, or modified easily. Most mutual fund companies offer online platforms where investors can manage their SIPs. SIPs are a popular way for retail investors to enter the equity markets with a long-term perspective. They provide a methodical approach to investing, reducing the impact of market volatility. However, it's important to note that mutual fund investments, including SIPs, carry market risk, and past performance is not indicative of future results. It's advisable for investors to understand their risk tolerance and investment goals before starting a SIP. Consulting with a financial advisor is often recommended for personalized advice based on individual financial situations. Types of mutual funds. There are several types of mutual funds, each catering to different investment objectives and risk tolerance. Here are some common types of mutual funds. Equity funds. These funds primarily invest in stocks or equities. They are suited for investors with a higher risk tolerance seeking capital appreciation over the long term. Debt funds. Also known as fixed income funds, these invest in bonds and other fixed income securities. They are considered less risky than equity funds and are suitable for investors looking for regular income and capital preservation. Hybrid funds. These funds invest in a mix of both stocks and bonds to provide a balanced portfolio. They are suitable for investors looking for a middle ground between risk and return. Index funds. These funds aim to replicate the performance of a specific market index, such as the S&P 500. They are passively managed and generally have lower fees compared to actively managed funds. Money market funds. These funds invest in short-term, low-risk instruments like treasury bills and commercial paper. They are considered very low risk and are suitable for investors looking for liquidity and capital preservation. Sector funds. These funds focus on specific sectors of the economy, such as technology, healthcare, or energy. They carry a higher level of risk but can offer higher returns if the chosen sector performs well. Tax-saving funds, ELSs. In some countries, there are mutual funds with tax benefits. For example, in India, equity-linked savings schemes, ELSs, offer tax deductions under Section 80C of the Income Tax Act. Global or international funds. These funds invest in securities from markets outside the investor's home country, providing exposure to international markets. Final conclusion. Investors choose mutual funds based on their financial goals, risk tolerance, and investment horizon. Diversification, professional management, and accessibility make mutual funds a popular choice for both novice and experienced investors. It's essential for investors to carefully assess their financial objectives and risk tolerance before selecting a mutual fund or combination of funds for their investment portfolio. Thank you. Invest wisely and grow your money safely with Stock Area Tamil.
சேனலை லைக், ஷேர் மற்றும் சப்ஸ்கிரைப் மூலம் உங்கள் ஆதரவை பகிரவும்.